Imagine a world without banks. No place to safely store your money. No loans to start a business. No mortgages to buy a home. And no financial system connecting people across the world. It sounds impossible today. But banks were not always part of human life. Thousands of years ago, people had a very different problem. They had money. But keeping it safe was not easy. Gold could be stolen. Coins were heavy. And long-distance trade was risky. Then something changed. People began trusting certain merchants with their wealth. These merchants stored valuable coins and precious metals. In return, they gave people proof of ownership. That simple idea slowly transformed into something much bigger. The world's first banking systems began to take shape. But here's the surprising part. The first bankers were not sitting inside modern skyscrapers. They were merchants, money changers, and wealthy families. And they discovered something powerful. Money could make more money. That discovery would change the entire world. But who were the first real bankers? And how did a simple place for storing money become the powerful banking system we know today? To find out, we have to go back to the beginning. Long before modern banks existed, people were already lending and borrowing money. In ancient Mesopotamia, temples and wealthy merchants helped store valuable goods. People could deposit grain, silver, and other valuable items. They could also borrow resources and repay them later. This was not banking like we know it today. But the basic idea was already there. People were learning that wealth could be stored, transferred, and lent to others. As trade expanded, another problem appeared. Different cities used different coins. Some coins were made of gold. Others were made of silver or copper. And not every coin had the same value. This created an opportunity. Money changers began exchanging one type of currency for another. They became essential to merchants traveling between different regions. But the most important change was still ahead. These money changers realized they could do more than exchange coins. They could lend money. And when borrowers paid the money back with interest, lenders earned a profit. The simple act of storing and exchanging money was becoming a powerful business. Soon, wealthy merchants began financing trade, ships, and entire businesses. Money was no longer just something people used to buy things. It had become a tool that could create even more wealth. And that idea would lead to modern banking. But there was one major problem. Who could people trust with their money? The answer would come from some of the most powerful banking families in history. One of the biggest changes in banking came from powerful families in Renaissance Europe. Families like the Medici became famous for their enormous influence over finance. They built banking networks across major European cities. Their branches helped merchants move money without carrying large amounts of gold. A merchant could deposit money in one city. Then, through trusted financial networks, access its value somewhere else. This made international trade faster and safer. But banking was about to become even more powerful. Banks discovered that they could lend money to businesses, governments, and wealthy individuals. Those loans could help build ships, expand businesses, and finance wars. Banking was no longer just about protecting wealth. It was becoming a force that could influence entire economies. Over time, banks became more organized. They developed systems for deposits, loans, interest, and payments. Eventually, the modern banking system began to take shape. But here's the question. If banks can create profits by lending money, who actually owns the banks? And what does it take to become a bank owner? That's exactly what we'll uncover in the next episode.